Hey guys, we made it. Today is Tuesday, December 30th. We're back live. This is Jeff Wright with Fish Creek Capital. Let's look at how the market finished. It was like nothing going on today. Very quiet, just kind of back and forth. I can share my screen, and then if you'll stick with me, I wanted to go over the JEPQ high yield dividend ETF. It's out there a lot. A lot of people like it. It's a high yield ETF for the NASDAQ that tracks the NASDAQ. And I just wanted to take a few minutes and look at it. But let's first look at the market today. I'm going to share my screen. This is a great tool I'm just on the free version. Let me refresh it. It's called finviz.com and has a heat map that shows the different sectors and how they are performing. Now that the market's closed, I'm just refreshing, and you can see if it updates. Yeah, so you can see technology, and if you highlight over each box, that like here's the stocks that would be in the software infrastructure. There's semiconductors. It's pretty cool. It's a pretty cool tool. And it just kind of gives you an overall look. There's a lot of ads on here, but there, Microsoft up a little bit, Apple down some, Nvidia down a little bit, Broadcom up a little bit, communication services, Google was up, Meta was up 1%, Netflix down, Tesla under consumer cyclicals down 1%, Amazon just up a hair. It's kind of a great tool. Here's consumer defensive. Walmart was down 0.5%. Coke down 0.13. Financials. It's just a good tool if you're looking for a snapshot from a heat map perspective for just the different sectors and what's kind of happening. Let's look on CNBC. Also, real quickly, so here we go. S&P post third consecutive losing day as year end approaches. Got one more day for this trading year, but we're kind of flat, really. So the S&P is still looking pretty good from a year to date perspective, 17%. So that's 3 years now of double digit gains. There's a lot of back and forth. You can find whatever commentary you want, as far as if the market's going to be up next year versus down. I can read both opinions. So if someone tells you they know what's going to happen, they're lying to you. So watch for that. So not a lot of action today. The Fed minutes did come out. Here's a news of course, we're on CNBC. There's been some division over, the rate cuts. That's nothing new. I don't think that really did much from the market perspective. You can see here, if you go to the CME group, let's let this refresh. The odds of the rate staying the same, 83%. Let's see if that updates. Yeah, 85%. So the odds for a rate cut in January, 14.9%. So we're pretty low there. So yeah, not much happening. Kind of a flat to down day in the market. Let's look at this JEPQ dividend high yield dividend ETF. A lot of people talk about it. A lot of people are looking for that dividend income. We here at Fish Creek Capital, we focus on dividend growth specifically. So these dividend ETFs are a little different. There are a few that we like looking at, but I thought I just would look at this JEPQ ETF because I see a lot of comments about it, and I was curious. I actually got a something in the mail about it, and so you can pull up. So if you go to, that's a JP Morgan product, and I'm switching around screens here, but I just was going to show you. This is for educational purposes only, informational purposes only, not investment advice. But you can go to these websites for these products and dig into the products all that you want. And I would encourage you to do that if you're looking at these products, because you've got to read down past the fine print, past the initial return. Like let's just start back on CNBC and put in JEPQ. So it was down a little bit today. Dividend yield is showing 10%. So that's like incredible. That's obviously it is a high dividend. So it meets that criteria. But year to date, like it's up 4.8%. You did get 10% in dividends off of that. So, compared to the NASDAQ, if we come back over here to the NASDAQ and then scroll down, we're looking at 21% year to date. Now, the NASDAQ does pay a dividend, but it's not going to show, it's not going to be 10%. It might not be here. And I might actually be wrong on that. So up 21% versus the 4% on JEPQ, and we're just going to close this out so that stops. But if you go to the JP Morgan website and then go to the JEPQ, I just Googled that. If you look over here to the right, you can see the fact sheet and then the summary prospectus. The summary prospectus is what I saw, and that kind of what sparked my attention for trying to just look at it and read it and to see how it actually did perform. So if you look at the fact sheet, even this is good. It's high level. It tells you what it's designed for, the approach, tells you who's managing it. There's 31 billion in assets on this high income ETF. You can see the performance there, but let's see. This is showing, so it's new. It's not, there's not a ton of history on there. But what's interesting is here you can see the top 10 holdings. That's all good. A lot of it is the big Fab Mag 7 names, which is what you would expect. But let's look over here at the prospectus. Morningstar actually rates it pretty good from the derivative income category. But let's look on the prospectus. So this is a little more detail. If you scroll down to the average annual total returns, and again, this is high level, trying to show you some tools that you can take and that you can go look at to dig a little deeper if you're looking at this as an investment option. My point, I think, is what I'm trying to get across is pull up the perspective, go to the website, look at the fact sheet, and just don't assume that 10% dividend yield is necessarily going to give you just a great performance. So here we're on page 5. So you have to kind of dig into this a little bit. Let's look at, so the past 1 year return before taxes, 24.8%. That sounds awesome. But because this is throwing off those dividends, there are going to be short-term gains or dividend gains taxed on this. So look at this. Return after taxes on distributions drops down to 19.9%, and then return after taxes on distribution and sale of fund shares, 14%. So we've got a 10% difference here. And then the life of the fund, so since 2022, so there wasn't much history on CNBC, and that's why. So it's really just 3 years old. We're down to a 10.6% return, and then the S&P is 25% for the past year. and 15% since 2022, or compared to the life of this fund. The NASDAQ 100 would be 25%, 25.8, and then 20%. So look at, and then that's just comparing the treasury bills. So it's very important to dig into these tools, these ETFs, these products that they're putting out there. Just don't take it at high level and think that you're going to get this great return. Now, again, I think your goal of this investment is also very important. If you're looking for a 10% dividend yield, it did throw that off this year. So if you're not paying attention to your principal, we've talked about that from just a dividend growth perspective, then you could take that 10% income from this product. But do consider the taxes and what the actual end result is going to look like. So your high yield ETF might not be as high of a yield as you think by the time it's all said and done. And digging a little deeper and pulling up some of the information on these products is the best way to determine that. Just don't go buy these high yield ETFs thinking it's going to be what you're looking for. I think that's the point I'm trying to make. So on the December 30th, one more trading day of the year, I just wanted to take a few minutes and just high level go to this JEPQ dividend ETF and dig down a little deeper to show you that you definitely want to go underneath the hood and kind of look at the actual results of the performance, not just the high level, what people get all excited about when it comes to, high yield ETF. Sounds awesome. Dig a little deep, do your homework. We can help you with that. If you would like help, there's a link below that you can schedule a free introductory call, 30 minutes. I'd be glad to get on a call with you and look at your portfolio. If you have questions about JEPQ, I'd be glad to answer questions about that. Let me know what you think about this product down in the comments. I've kind of given you some of my feedback on this video. So put in the comments below what you think about this product. It could be a good fit for some people, but again, this is informational purposes only. You do want to do your due diligence and do your homework. Let me know what you think below. And thank you for watching. We'll catch you tomorrow.